Good morning, I'm Steve O'Hare. Welcome to Signal Centre's Talking Bull, and it is July the 7th. It's Friday, it's non-farm payroll day, and we're going to dive into the news headlines, then run through some technicals, and have a little look at a trade idea or two that we're looking at today, and yeah, give you a wrap as what we're expecting. So let's start off. Let's kick off. US ADP reported a surge in private payrolls of nearly 500,000 for June, compared with expectations of around 225, following a revised 267 increase the previous month. There was, however, a significant retreat in manufacturing jobs for the month. The ADP report was that annual wages growth slowed to 6.4% from 6.6%. The ISM non-manufacturing index recovered strongly to 53.9 for June from 50.3 previously, and above consensus forecast of 51. US initial jobless claims increased to 248,000 in the latest week from a revised 236 previously, while continuing claims declined to 1.72 million from 1.73. US Treasuries came under further pressure after the US data, with a surge in US yields. The 2-year yield surged to the highest level since 2007, with a 10-year yield holding above 4%. The jump in bond yields, fears over the high interest rates and increased doubts whether a soft landing could be achieved, undermined risk appetite and triggered fresh losses across all global equity markets. The dollar posted losses in Thursday's New York Open before reversing course sharply after the US ADP data. US currency index posted 3-week highs following the US data, but failed to hold on to those gains. US labour market report will be released later today. Consensus forecast for an increase in non-farm payrolls of around 225,000 after a 339 increase previously, but the whisper number will be higher. Unemployment rate expected to edge lower to 3.6 from 3.7, with a 0.3 increase in average earnings for the month. Canada will also release its latest employment data on Friday. Market expectations of the employment increase of close to 20,000, with the employment rate edging to 5.3 from 5.2. So that's the headlines covered off. Let's dive into the markets. If you're interested in me covering any markets, please let me know. Morning, everyone. Morning, Saman. Morning, Mosh. Morning, Trader X. It's only me today. Joe's taking a well-deserved break. Yeah, let's see if we can skip through these markets. But as I say, if you want me to cover any in particular from a technical basis, I might give you a slightly different opinion to Joe, because I might be looking at slightly different timeframes. But I'll really, it's all about the technicals on this show, so we'll try and stick to that if we can. Cryptocurrencies, we're looking at Bitcoin here now. One of the two formations I want to sort of highlight, we're coming to the end of the week, so let's take a look at the weekly chart, see what it's done. Now this chart hasn't really changed in terms of these resistance and support lines that have been drawn in for a long while now. We've had this line drawn on since, well, for a couple of years actually, and we are trading in this range of resistance now. It was a range of support previously, broke down through it all the way back in May last year, and have remained below the top of it since then. Over the last few weeks, we've had a real sort of uptick with lots of talk about Bitcoin ETFs being created by the big investment companies, and that's obviously got a lot of traction and a big upside move we've seen. The main formation I can see on this chart, which I've had highlighted for a couple of months now, is this inverse head and shoulders formation. Now this is a bottoming formation. We can see the head here around about that 15,500. We're almost double that now. So a nice 100% rally since then in value. We have stalled recently. We had the first breakthrough, the neckline. The neckline comes in at 25,400. We had the pullback, and as we get in head and shoulders and inverse head and shoulders formations, we got a pullback to the neckline, retest, and the reaction higher. The measured move target for this bottom is 35,000. That's around about where we're seeing. And yeah, so that's what we're looking at really on an upside basis. I'm going to sneeze in a minute. Excuse me. Right. However, this week has been a bit of a turnaround, especially over the last sort of couple of days. We've seen price action move up towards that high. On a daily chart, it will show it better. I drew this like these two levels, this range yesterday. We got the high from last Friday, the high from Thursday, which actually superseded last Friday's high. But then the price action gave up those gains and reversed sharply lower. So that's like a typical shooting star candle, which is one of those candles you don't want to see if you're long in the market. It's not quite at the top. It's sort of like almost into range. So not quite as strong as a shooting star sticking up here on its own. However, we have got the potential now for a double top formation. And I said yesterday, what are we seeing here? Two options, really. We're seeing as a bit of a bullish flag type formation where price action moves impulsively higher, has a period of consolidation, ready for the next move. And that's when you get the level I was showing you on the weekly chart here. This level here is probably where we're looking at for the measured move target. I think it's just above 35,000. Let's measure it. Let's not be lazy. So something like this. Get a bullish flag formation. You can quite easily see that 36,267. So again, something bubbling under maybe that we are going to make that break higher. However, the level I would watch, especially if I was long of this market, which I'm not, is this 29,500 level. That is key to hold. Support needs to hold there, especially on a closing basis for a daily candle. I mean, it's it could break through. Little bit of follow through to the downside, maybe a few stops of people sort of like getting a bit nervous, but really has to close there under there on a daily basis to be significant. That would lead to potential. If we did get close below there, then we'd be potential double top here. Measured move target for that would be 27,500. So that's more of a short-term play on Bitcoin. Yeah, thanks, Mosh. I'll take a look at Sterling Oz in a short while, see if there's anything else. We're streaming live on TradingView, obviously. Let's take a look at commodities. We had a couple of trade ideas that we posted yesterday. Joe did well. He made money in his. I didn't. I went long of gold, and then we had a bit of a reversal. So let's take a look at that. Gold overall does feel a bit toppy. However, we have had the most recently, we posted this morning doji star formation here. 3 candles, the sell-off, the spike lower, price action closes around about where it opened or slightly higher, or just around about that level. That's gives it a doji. And then the acceleration higher the following day. So a real reversal from there. We got down to 1893. That's the support level I'd be watching on the downside. We had that prices react higher. 1935 is quite a key resistance level at the moment. As you see, when we broke through, it formed a bit of support back in March. Also provided support in May. Also provided support in June before breaking down through it, now acting as resistance. So 1935 top side, 93 on the downside. They're the levels to watch really in gold. At the moment, Wednesday's price action was a bearish outside candle engulfing the previous 2 days bodies of price action, and then we got a spike higher yesterday, which I thought I was called it right. Thought we had a little bit of a stall and then going to react higher through that resistance, but then it turned around. Dollar strength, which hasn't been sustained actually, and that's why we're seeing a little bit of a pullback higher. So really all about the dollar at the moment. Obviously we've got geopolitical issues going on around the world, and that's impacting obviously on this safe haven product. So looking at that short-term basis, I suppose this is what I was looking at, the inverse head and shoulders formation. Yeah, and you see 1935 as a neckline there. So really you should wait till it breaks through there, but we just sort of like go with it. So there's still a little bit of hope for that formation yet. We're getting that reaction higher, but might leave that alone today. You can see the trade idea here. Thought I was going to do all right. Never mind. That's what happens. Crude oil. Take a look at this. I have to refresh this for some reason every day. A positive day again yesterday. We've had a pretty decent couple of weeks with price action moving off this $67 support level. We've stalled just in front of resistance yesterday, 72.70. We highlighted the resistance. This was like 21st of June, Wednesday's and Thursday's high from last week. And oh no, the week before, sorry, so a couple of weeks ago. So that's like the resistance level coming in. I'll just move a little bit of a marker there. So in a bit of a range here, but nice momentum up into this. So looks possible that we could test that level at some point today. That's in crude oil, WTI crude oil. Similar sort of levels we've got in Brent crude oil. Actually, more of a downward trending resistance here. Looking at this level that we've had before, 77.47, and also downward trending resistance coming in at 77.82. So a really strong move this week. Thursday's price action from oil inventories, obviously, oil inventories the day before sustained levels, but we've had a nice push higher from yesterday's price action and Friday continuing on. That's commodities. As I say, anything you want me to cover, I'll do it. I'll just dive into dollar index. That's the main one we consider when we're looking at FX. Obviously, it drives a lot of pairs. That's the one everyone's interested in. And here we go. Yeah, so we can see the price action yesterday spiked higher, took out the resistance level at 103.54 that we picked up on the show yesterday. That was resistance there. There was another resistance above that, 103.75, but then reversed lower and under pressure as well from Thursday. We've got that as a delayed index. I'm not sure why. But anyway, so let's take a look at euro dollar. That's like more of a live price of the dollar. The euro, the dollar index has about 60% basket of currency. 60% of it is euro dollar. So that's like the main driver behind it. You can see this like bullish candle yesterday, nice bullish engulfing candle after the previous day's inverted hammer. So nice reversal here from support in euro dollar. So maybe a potential for further upside here, 108.35, providing that support now as we go into the weekend. Resistance really sort of like probably looking at around about 109.15. That was a level we picked up last week. Momentum is to the downside, but only slightly to the downside, and we've seen the range slowing down. So potential for a big move at some point, but at the moment, really sitting there under a bit of pressure. Let's get these. On the 1 hour, 4 hour, you can see it's pretty much been quite sideways price action for the last week or so. So not really a lot to talk about. The candle at the moment, which is a 6 o'clock to 10 o'clock candle, we're 8:30 at the moment, 8:25 at the moment. It's bearish outside candle, so that has run into resistance with the Ichimoku cloud and a few other horizontal resistance levels at that 109.10 level. So yeah, that's where we're looking at resistance, maybe stalling. and slowing down. Obviously, we've got non-farm payroll later, so the expecting a huge amount of volatility then. Obviously, since ADP yesterday came in almost double what was expected. Cable looking pretty smart at the moment. We've had Bank of England this week as well. Hints of potentially rates topping out 6.5%, which was a big surprise. And on the back of that, obviously sterling has continued its outperformance. This is the weekly chart in sterling, and it wasn't long ago. You can see from this chart here, we're actually down here at 103.56. I mean, that was September last year, so as I say, not long ago at all. Main levels to watch really on the downside, the longer term levels, 123.15. Also support probably around about 124.60. But we've topped out here the week of 12th of June at 128.50 and pulled back from there. But last week's price action was a bit of a indecision to the downside, and we've this has been followed up with a really positive week this week. So sterling looking strong going into the weekend, 127.35 trading. So we've only got a request for, I did see it somewhere, sterling Oz. Let's take a look at sterling Oz. Obviously the Australian dollar is a very sort of like commodity based currency. So, but we're looking at some interesting levels. We can see, look at this is a weekly chart, so really long-term levels we're talking about here, and that this high from the week of 24th of Jan at the start of last year, 2022, coming in at 192.21, and we can see how price action has sort of remembered that resistance level, and prices have stalled there both last week and this week. We're actually pushing that barrier now. If we want to get some long-term levels out of here, we'll probably find that resistance a little bit further up, probably at the 78.6 fib level, where we're above the 61.8 fib level, so looking pretty strong. Yeah, so overall this does look positive. No real sign of it slowing down either. It's bounced more recently over the last month or so from 185, but looks like potentially more upside there. Obviously looking quite strong on the short-term charts as well, and you can see just how this has performed over the last sort of like 7 or 8 days. Had that sell-off, inverted hammers, didn't really want to go down. So 189.77, decent support. A break of that maybe brings 189.50 into view. But really that's a little bit of a way off at the moment, so decent support there, and as I say, nothing really slowing this bad boy down. So sterling Oz looking pretty positive in my eyes. Trader X, I'm looking to long euro New Zealand dollar based from a weekly time frame. Let me have a look at that. Euro New Zealand dollar. I do like looking at these Aussie and Kiwi currencies. So let's have a look at the weekly. Trader X looking at a long on this. Yeah, I mean, you can see this base, this really nice inverse head and shoulders formation playing out. Probably say that a neckline around about 173.50 isn't too shabby. 171.87 also, where we got down to the week of the 15th of May. Since then, we had this explosive week, Monday the 22nd of May week. That was like a bearish outside candle, and really has sort of sets the scene over the last month or so. We had a bit of a pullback here the week of 12th of June, but it ended up closing at the same price it opened on the week. So that was a doji candle indecision, and evening doji, morning doji star formation. But you know, I normally like to see them at the bottom of a range, something like here. This is sort of mid-range, so we can't really count it as a really strong signal when it's mid-range. However, last week's price action, we've seen a little bit of a stall. We saw that rally higher up to 180, so a decent like psychological level. That was short of the 180.84 resistance from the week of the 24th of April. And then this week's price action has been negative, but it is rebounding slightly on the week. If we were still down here, that's a nice evening star formation. I'd be pretty negative. So as long as price action maintains these levels at the moment, yeah, still looks a little bit bullish. And you can see this on the daily chart. You can see yesterday's price action is a really strong candle, really strong reversal candle. We had this like downtrend of like 5 days, and then yesterday's price action completely engulfs with the Wednesday's price action. So that's like key. Wednesday, it just didn't know where to go. It was exhausted from this sell-off. So had a bit of a dip further down yesterday, but the reaction higher is really, really positive. So now we're looking at where's the supportive levels to sort of tell us that this has got good potential to continue into next week. We've got to look at shorter term timeframes for that. Let's take a look at the 4-hour chart. And again, on here, we've got this morning doji star formation that's posted from the 6 o'clock candle yesterday. Really strong up move, breaking through resistance of 176.17. Now for me, that is maybe the first step in a long outlook. We've got a hanging man candle from the yesterday's 10 o'clock candle, so overnight. We've seen a bit of a pullback, and so we've seen price action try to rally in the last couple of hours, and it's back on the defensive at the moment. I would look as 176.18 as being a strong indicator of whether we can get this short-term consolidation upwards as well to continue. Plenty of scope for any sort of pullback, and even if we sort of like apply like a general like Fibonacci retracement levels on this, you can see, you know, could quite easily see a move up to 178 without even being necessarily bullish. So plenty of scope for a little bit more to the upside. But I'd look, you know, if I was trading this or had the same feeling that looking for a long on this, then I'd you know, on a weekly time frame, you've obviously got these lower levels. It has to remain above this 174 174.80 level. But on a shorter term time frame, I'd be looking for support to come in around about this 176.18, as I say. The hourly chart, it's above the cloud. I always like to see short-term charts above the cloud. And even here, you could sort of say, are we seeing a little bit of a bullish flag formation? If it does play out, this is one to watch. And well, let me just measure it with this tool. Measured move target for that around about 178.50. So playing out quite nicely here. We've got a little bit of support from the cloud. Price action is nice. If we do get a break below this 176.40 level, opens up the downside a little bit. If it holds here, then risk reward, you know, this is a nice one to fade. You could sort of like have a really tight stop even now, targeting the top of that flag formation again. So hope that helps. Not actually looking at, you know, maybe it's not so much on a weekly basis. Bullish, I'm not convinced yet. That's what I'm sort of seeing. You're almost seeing this. That's the main thing I'm looking at on a weekly basis. We've had this nice upward momentum, but have we got potential for a double top? I'd be more interested in that, really. Support down at 171.67. Again, them levels are quite a way off, and looking at more long-term picture. But overall, yes, bottoming formation, I like it. But yeah, would rather be buying it if you're not long of it already. If you're long of it already, great. But I'd rather be looking at sort of like buying between that 173.47 and 171.67 level. Potential for further upside. Got to 2. I remember when it got to 2 that day. So I hope that helps. And yeah, thanks, TraderX. Daily price action is nice. Yes, I agree. Looks really nice after that bullish outside candle yesterday. I was looking at that candle yesterday for the gun to head as well, and on the gold, I saw that bearish outside candle, but I still went long of it. Mad. Anyway, let's take a look at indices. Indices, as I said yesterday, I was sort of like sold the DAX a little while ago, and that's nicely on side, but only small. Yesterday's price action was pretty horrendous. Let's take a look at DAX in a bit more detail. And it's funny enough, I highlighted this level of support, which you can see used to be resistance, turned out to be nice support, and we absolutely sliced through it yesterday. 15,700 was the level I was picking up as that could be potentially a level of the initial level of support, sliced through it. And now we're through it. For me, it's a level of resistance. Potential for a double top formation here, or a treble top, or you could say it's a inverse head and shoulders formation. I'll quickly draw it on the charts for you. This is like a left shoulder neckline head. So for me, that's played out nicely. As I say, when you get these head and shoulders formation, normally what you do is you get a breakthrough, then you get a pullback to the neckline, to a retest to confirm that trade idea. And again, if you're looking to get some sort of measured move target off this, it's looking below 15,000. So I can remove that, leave this on the chart, and yeah, what we do to get the measured move target, we measure from the head to the neckline and extend that range lower. So yeah, maybe I'll target that. That'll be a nice target to pick up on. That'd be like a 5-to-1 risk reward. I think I got short just above 16,000 and left the stop at just above 16,200, just above the right shoulder. So risking about 160 points. Now looking at, could easily bring my stop down. I'm going to leave it, and it's only a small trade. I'm going to leave it and going to maybe target that move. I love being a bear in the indices. Sorry for all you bulls out there. So let's take a look at Dow. Dow also had that sort of like move yesterday. We had this downward trending resistance line, had multiple touch points on there. We broke above it and we've been above it for 4 weeks. We're retesting again. Feels like it's going to give up. We can sort of like now raise that as well. There will be downward trending resistance because out of this last month, we've had 3 highs, which have been lower highs. So a nice downward trend. You could probably negate it from here and just have it here. That's quite a nice one. Or you could even go slightly more, which will be a little bit higher there. So they're the sort of like levels of resistance to watch. I think quite clearly this 34,550 level would be like, yeah, we have broken through that resistance, but a retest. You can see we've had like a really strong candle the week of Monday the 12th of June. We've got a bearish engulfing candle the week after, and then we had that unbelievable rally the following week, which again was a bullish outside candle. It looks like we're heading for a bearish engulfing candle, close to a bearish outside candle. What's the high for that? 34,470, 34,480. Yeah, so the high this week is slightly lower than last week, so it'll be a bearish engulfing, not a bearish outside candle. If we manage to engulf the open of last week, which is 33,730. Under pressure at the moment, again, only just slightly lower on the day. NASDAQ has sort of like held up quite well. There's a resistance there, 15,273, formed by these 4 highs that we've had. So that sits not quite nicely as well. So really, all eyes on non-farm payroll. If we do get some real sort of like activity in there today, especially if we do get some negative follow through on the indices, these will be quite significant levels on the weekly charts for the US indices. You can see the S&P price action from last week was really, really good indeed. So yeah, just covered off all that. Now we go to that time of day where we take a look at our gun to head trade ideas. Yesterday, quickly drive through the price action. I went short of gold, stopped out, I lost 18.55. Joe went short of Aussie yen, and that moved lower, so he did okay on that. So let me just take a look at Aussie yen, see if there's anything that Joe I can follow through on that to the downside. That's breaking lower again. So obviously with these gun to head trade ideas, we close them out here. You can see 9 o'clock last night, we closed that out. Let me get the week there. So that's where Joe got short. That's where it closed out automatically on our account last night. This is a live account we've been running since start of January. Started with 2,000. We're down at 1753. So not doing too well at the moment. So I've got to try and break my run of losing trades. Now we always get this in non-farm payroll. Gold is always like one to go for. And I'm sort of like sitting here thinking yesterday or at start of the week, I think I went for a long trade idea. Can't see it. No, I went for a short trade idea, got stopped out here. That was last Friday, actually. Yesterday, you can see I was on the side for a little while. We're getting a little bit of downward momentum. And if we get the dollar rallying again today, then we should sort of like get this gold selling off a bit. But I think you've got that geopolitical turmoil going on in the background. Any escalation in the Ukraine-Russia thing, then we've got we'll be seeing sort of decent upside in here. So I think there's a bit of a battle going on. Let me try and run through these. I like to look at 4 time frames, so weekly, see if we get any confirmation on the daily, and then look at the 2 shorter term time frames. Canadian yen getting hammered. That looks pretty decent for a weekly trade idea. Nice evening doji star formation. Canadian yen, dollar yen, bearish engulfing on dollar yen. Really, dollar absolutely getting smashed at the moment. Euro Oz, euro dollar. Maybe a little bit of potential here. Sterling dollar looks pretty decent at the moment. Sterling yen, dollar Swiss, looking at breaking that these levels, breaking down at the moment. Maybe we get some dollar Swiss going, shall we? We've seen price action breaking this support level here, breaking through, so that's quite nice. We can have a nice little stop. Let's go for this. Trying to look at some targets. Potentially down there. I don't know. We'll go for it. So look, I'm looking at selling dollar Swiss, short position here, getting short because it's just broken through support. That's the sort of like level I've got to be looking at. Doesn't give me much room on the upside to get this wrong. So yeah, don't like that at all, actually. Euro New Zealand dollar, we can see it's broken through that support level there. Yeah, really. Feel like I want to buy something, but nothing really to buy. Let's take a look at some indices. Do we think we're going to get that follow through to the downside in indices? Does seem to be breaking lower. This isn't great at all. Okay, price action has stalled this morning, so we've got a little bit of a level to sort of like use as a stop level. If we're going to look at a weekly chart level, its support is down at 4,000 in Euro 50. So let's try and get something going here. Price action. The last hour, we've seen it drop 20 odd points. On the select market, with a small account, you can get a decent sort of like size on in Euro 50. Let's say 1% risk. and that looks pretty decent. Let's see where that ends up at. Yeah, why don't we just do that one? I'm selling euro 50. We've got a stop just above the high here. The stop coming in at 42.28, targeting a move to 41.30. That's what I'm looking at. So let's see how that gets on today. That was a bit waffly, all that, but let's see how things go. Later on today, we've obviously got we've got the US unemployment report, which we talked about. We've also got the Canadian unemployment report at 1:30 today UK time, British summer time. Events for next week to consider: UK labour market data on the 11th, and on the 12th we've got US consumer prices and the Bank of Canada policy decision. So that's what we've got to look forward to. Be very careful today. We'll have lots of volatility later. Please be careful out there, and we'll catch up again on Monday. Thanks for joining me today, and good luck.